Hello everyone. I, CA Aditya Maheshwari, on behalf of WRC of ICAI, welcome everyone to the third day of the refresher course on Gujarat RERA Practice and Professional Opportunities, organized by WRIC of ICAI, which has started from 23rd August, and today is the third day. Topic to be covered for today is on transfer of title, agreement for sale, CA certificate, annual statements, and functions and role of power of RERA by our expert faculty team. I thank WRC of ICAI to give me an opportunity to coordinate the event. So the first topic of transfer of title, agreement for sale shall be taken by CA Mohit Adatiya, and I will request, without further wasting any time, I will request him to kindly begin his session.
Thank you, Maheshwari. First of all, I would like to thank WRC again for inviting me for this webinar on the transfer of title and agreement for sale. Is my screen visible, Maheshwari?
Yes, sir.
So today's topic is on the transfer of title under section 17 and agreement for sale under section 30. These are the two preliminary documents which are used by the promoter and allottees in order to identify their understandings, and then at the end of the completion of the building, apartment or plot, transferring the rights and titles in the property. Friends, topic assigned to me is transfer of title under section 17 and agreement for sale under section 30. I would like to take the liberty to take agreement for sale under section 13 first, and then we'll go to the transfer of title under section 17. Because if you see preliminary, the risk involved are more under section 13, because the time for completion of the building normally takes 1 year to 2 years, maybe in a moderate kind of structure. So during this time, if allottee is making the payment to the promoter, there has to be some safety to the money invested to the allottee, and more of the disputes between the promoter and the allottee will be found during this stage. So in my humble opinion, the agreement for sale is kind of a more important document. I'm not saying transfer of title is not important, because ultimately the rights and interest in the property is transferred only upon execution of the sale deed. So it is binding documents and it will have a longer impact. But to deal with the most critical situation, the agreement for sale under section 13 has to be dealt with very critically. So we will first understand what is agreement for sale. We will see the main features of the agreement for sale. What are the model agreements? Why is it so important? And relevant circulars and orders, if any, on the subject matter, and then we will go to the transfer of title under section 17. Agreement for sale is nowhere defined under the RERA, but we can infer the meaning of the agreement for sale from Transfer of Property Act 1882. As per section 54 of the Transfer of Property Act, it is said that a contract for sale of immovable property is a contract that a sale of such property shall take place on terms settled between the parties. It does not itself create any interest or charge on such property. So basically, Transfer of Property Act has clearly defined the agreement for sale, that it is a document where all the terms and conditions will be agreed upon mutually by the promoter as well as the allottee, but it will not create any charge or interest on the property unless and until it is transferred at the end of the completion of the project and the execution of the sale deed. Thus, the agreement for sale is an agreement whereby promoter promises to transfer property to the allottee in future upon fulfillment of certain terms and conditions by both the parties. It does not create any right or interest in the property. These are the main features of the agreement for sale, broadly general features. Parties to the contract agrees that transfer of property from the promoter to the allottee will take place in future for price consideration that is decided at the time of entering into the agreement for sale. Right, title and interest in the property remains with the promoter and will be transferred to the allottee only upon the execution of the sale deed by the promoter in favor of the allottee. one more important thing, it is a conditional document as it is subject to fulfillment of certain terms and conditions and performance of mutual obligation by both the parties. Now, friends, we will wonder why I am stressing so much of pressing so much of our agreement for sale for a professional like us, like a chartered accountants. Why the knowledge of agreement for sale is necessary? There are three main points I would like to put forward. The one is the agreement for sale is the heart of RERA. It is the document from where you will find the roles and responsibilities of promoter, vice allottees. The primary objectives of RERA, if you read the bare act, there are 6 primary objects of RERA. One of the preliminary objective is protection of the interest of the consumer in the real estate sector. So consumers' money remain invested, as I said earlier, for a longer duration compared to any other investees. So right and interest are transferred at the end. So it is very important that we go through the terms and conditions mentioned in the agreement for sale. Then when you are acting as a professional consultant for registration of the project on behalf of the promoter, then if you see pro forma for agreement for sale, which has been prescribed under Rule 9 of Gujarat RERA General Rules, which has been termed as a model agreement under Annexer A, you will have to go through the agreement for sale in a very detailed manner, because once you submit the file, there if the agreement for sale model agreement, if the agreement for sale of the pro forma, if it is not matching with the model agreement provided under Rule 9, then you will get queries from the legal department. So it is very important that every chartered accountant who is acting as a consultant for RERA registration go carefully and read each and every terms and conditions mentioned in the model agreement. What happens normally is that when you deal with the promoter, every promoter will have different advocate appointed for drafting this particular agreement for sale. Initially, during the starting phase, it used to happen that the advocate for one promoter will have a different format for a model agreement for sale. The other one will have a different model for different draft for the agreement for sale. Especially in Gujarat, most of the projects, the drafting happens in Gujarati. So English is very simple language, as we say, but in Gujarati, if you try to find out the meaning, you will be lost. So it is always advisable to keep model agreement for sale English version in your hand handy, in order to check that all the points provided under model agreement for sale are covered in that particular Gujarati draft which you are going to submit to the RERA authority. Then in practical, in day-to-day practice, we face that this registration part is a kind of joining the dots. There are basically 3 departments in the RERA Gujarat RERA authority who are checking your files. So first department is a technical department which will check layout, commencement certificate, and brochures and all other stuffs like NA order or NOCs. The finance department basically will check your form 1, 2, and 3. And then comes the legal department, which will check the model agreement for sale, sale deed, allotment letter, income loan certificate, title clear report, all that stuff. So you where you are putting something into one document, it has to be matched with all other documents. Take a standard example of amenities, services and amenities. If you are giving any services and amenities, and if you are putting that thing into your browser, then that particular amenity should be there into form 1 of the architect certificate under table B. Architect has to provide that these are the facilities which will be provided by the promoter, and this is the percentage of completion for that particular facility. Same thing will be there in the agreement, model agreement for sale. You have to mention the kind of facilities which will be provided under model agreement for sale. So these are the 3 things. There are 3 departments who will be dealing with specification and facilities provided by the promoter. The one technical department will look into the browser. The other, the finance department, will look into the form 1 architect certificate, and the third, the legal department, will be looking into the agreement for sale. So it is very important that we try to join the dots whenever we submit the file, and for that purpose also agreement for sale and the analysis of agreement for sale is very important. And the last one, the professionals who are willing to practice in litigation or who are already practicing in litigation, they must have the knowledge of model agreement for sale. If you see, uh, the clauses provided under the agreement for sale are not randomly provided. They are provided based on the age, certain rules and regulations. So you can join the dots, you can join the linkage of model agreement for sale, every clause, and you can link that particular clause with particular act, rule and regulation in order to satisfy that all things are covered. So basically it will enhance your knowledge if you thoroughly go through the agreement for sale and try to link that particular clause with all the legal framework. What used to happen in the earlier days, that promoters may enter into unfair trade practices, and because of which the allottee has to face something like delay in possession of the property. Most clauses under the agreement for sale used to be in favor of the promoter, like rights on terrace, they will be having they can install the mobile tower, etc., etc. Then rights on the future FSI, additional FSI, that will be with the promoter. Then they can alter the plan as compared to what is promised at the time of taking the booking. They will not provide certain facilities which is promised in the browser, but when you see the reality, the facilities provided will not be there. Then there will be heavy interest penalty on the LAT when there is any delay in the payment, but there will be a negligible interest on the promoter for delaying possession. So the earlier in earlier days, the agreement for sale used to be more in favor of promoter, and thereby there used this is the reason I'm saying that agreement for sale is satisfying the main objective, that is the protection of the end users. Gujarat Ownership Flat Act provided the protection to flat buyers only, where RERA provides protection to buyer of residential units, commercial units, and plot buyers. Also, RERA has provided model agreement for sale to protect and balance the interest of all stakeholders. Because in RERA, if you see the definition of apartment, it includes all residential as well as commercial units. So the coverage is not only to the flat buyers but also to the commercial property buyers and plot buyers. So this is why it is very important that we look into the model agreement for sale in a very deep manner. Now we will first there will be act, then rules, regulation, and respective orders and circular. We will try to see what is exactly required under Central Act. Under Section 3, Subsection 1, a promoter shall not accept any sum of money more than 10% of the cost of the apartment, road, or building, as the case may be, as an advance payment or application fee from a person without first entering into a written agreement for sale with such person, and register the said agreement for sale under any law for the time being first. So promoter has to first enter into the written agreement, as well as he has to register the agreement for sale as per Registration Act 1908. Now the Section 3, Subsection 2, which is saying that the agreement for sale as referred to in Section 1, which we already discussed, shall be in such form as may be prescribed and shall specify. I have broken down the entire Section 13, Subsection 2 into different segments, so that we can briefly understand what exactly is required under the Central Act. The first is the particular of development of the project, including the construction of the building and apartments, along with the specifications, internal development work, external development work, the dates and the manner by which the payment toward the cost of the apartment or plot or building, as the case may be, are to be collected from the allottees, and the date on which the possession of the apartment, plot, or building is to be handed over to the allottee, the rates of interest payable by the promotee to the allottee and allotted to the promoter in case of default by any of the parties, and such other particulars as may be prescribed. Whenever we see the word prescribed, we directly go to the rule to see what exactly is prescribed. So rule 9 of the Gujarat Real Estate Regulation and Development General Rule says that rule 9, subrule 9, subrule 1, for the purpose of subsection 2 of section 13, that is what we have already seen in the earlier slide, the agreement for sale shall be in the form as per Annexure A, with such variations as the promoter and allottee may agree upon, provided that the said agreement for sale shall not violate the provision of the Act or rules and regulations framed thereunder. Here, friends, so rule 9, sub-rule 1 is saying that it should be in the annexure as per Annexure A, but with such variations as may be mutually agreed upon. But as per circular 9 of the Gujarat RERA, dated 30th August 2018, it has been made mandatory to include all 31 clauses of model agreement for sale in pro forma agreement for sale to be submitted at the time of registration. So whenever you are trying to submit the application for the promoter, you have to furnish the model pro forma agreement for sale, that this is the kind of agreement for sale we will execute with the allottee while accepting more than 10% of the money of the total cost of the particular unit. Then that particular pro forma has to be as per the model agreement for sale. Although rule is saying that such variations can happen, but by way of circular, Gujarat RERA authority has made it mandatory for all projects to make their agreement for sale as per model agreement. Rule 9 sub rule 2 is saying that any application letter, allotment letter, or any other document signed by the allottee in respect of the apartment or plot or building prior to the execution and registration of the agreement for sale for such apartment, plot, or building, as the case may be, shall not be construed to limit the rights and interest of the allottee under the agreement for sale. That means this particular agreement for sale will supersede or earlier documentation or allotment letter or any kind of understanding between the promoter and allottee. This particular agreement for sale will supersede all those understandings. Now, after going through the meaning of agreement for sale under Transfer of Property Act, after understanding the Central Act requirement, then going through the rules, we will directly jump into the model agreement for sale. These are the important contents of the Annexure A. First and foremost, detail of the promoter is required and the detail of allottee is required. Then the complete recital of the title of the promoter to the plot on which the promoter is proposing to construct the sale of the apartment. So it will happen so that the property might have come to the promoter after changing so many hands. So from the beginning, the advocate will have to provide how the promoter has become the owner and Raja number and all that particular details will be required to be furnished in the title. All Hakpatrak Chha, Gam number, all those particular entries, the transfer, sale deed execution from one party to another till the time it has come to the promoter. Also, the title will be required to be furnished in this particular format. Then, as I mentioned earlier, see, this is a kind of internal controls. As an internal auditor, we see what could go wrong. The same way, government has seen what could go wrong, and then they have plugged in the internal controls. The same way, if you see the third one, the description of the overall project, that is number of buildings in the project, number of basement, podium, and ground floor and the upper floors. So earlier, what used to happen, as I said, that they can alter the plans without taking the consent of the allottee, and the allottee will see ultimately what is promised and what is in reality is different. It might be even promised that this is a 4-floor apartment, and when you go there, it will be a 5-floor or 6-floor apartment. So this kind of malpractices will not happen now, only because of agreement for sale. Because at the time of agreement for sale, the builder has to provide that how many buildings are there in the project and how many floors are there in the particular project. Then description of the units proposed to be sold. So it has to provide unit number, the floor on which the unit is located, the wing in which the unit is located, and the phase, whether it is in the phase 1, phase 2, phase 3, likewise. The agreement for sale has to provide the RERA registration number for the number registered with the Gujarat RERA authority, and the copy of the certificate has to be attached with the registered agreement for sale. Then the annexure 1 is provided the right to the allottee to inspect the building plans, layout plans, specification, certificate of title, authenticated copies of the revenue records like property card, index 2, etc. by the allottee. And one more important thing, the carpet area. It has to mention specifically what is the carpet area of the particular unit. Now the carpet area has been taken as a standard unit of measurement across the country, and all it. Everyone is taking the reference of carpet area from RERA. Even you go to GST, all the references of the carpet area under GST as well are taking the reference from RERA. So there will be no mismatch of the area, and the carpet area is specifically mentioned. Promoter has to stick to the carpet area mentioned in the agreement for sale. We will see what could be the circumstances if the carpet area is more or less in the forthcoming slides. Now we will go to the important terms and conditions under the Annex A. Consideration payable for the purchase of the apartment, including the proportionate price for the common area and facilities, price for the balcony, price for the wash area, open terrace, open parking space, and covered parking space. Friends, there are some lacuna while going through the Annex A. I found that open parking space uh, in the model agreement for sale, there is a separate clause for the sale of open parking space. But if you go to the definition of the common area, open parking space is a part of common area. Covered parking is okay, is part of, it is not a part of common area, and promoter is entitled to sell the covered area. But open parking space is a part of common area. When there is something which is a part of common area, it cannot be sold. So I think there is some lacuna in here in drafting or something, or maybe it may have differently altogether different meaning. But there are some litigations also in RERA as well, that open parking space is a part of common area and promoter cannot sell the particular thing. Then why the model agreement for sale is a particular clause to mention the sale price of the open parking space? That is a question mark. Then amount paid before the execution of agreement for sale and the payment plan for the balance amount to be paid. There are some milestones mentioned in the model agreement for sale, that up to the steel floor so much has to be paid, then up to the first floor, second floor, and likewise. So in the agreement for sale, it has to be mentioned whatever has been paid till the date of agreement for sale and how the balance amount will be paid by the allottees. A rebate in case of early payment of the installment by the allottee. Then the clause is variation in, as I said in the earlier this thing, the carpet area is very important. Variation in the carpet area subject to the cap limit of 3% shall be refunded to the allottee with the interest in case of reduction in actual carpet area, or demanded from the allottee in case of increase in the carpet area. I don't think there will happen that there will be increase in the carpet area as compared to what is there in the building plan, but it may so happen that there will be a reduction in the carpet area when you actually measure the physically after taking the position. If you actually physically measure the carpet area, if it is less than the one which is provided in the browser as well as the building plan, then up to the limit of 3%. Obviously, if it is more than 3%, then LOT has a right to go to the adjudication officer and demand the compensation along with the interest. But even if it is within the 3% limit, if there is a decrease in the carpet area as compared to what is provided in the building plan or what is promised to the LOT, then LOT can get the refund along with the interest. See, in the interest portion is provided in case of allotee, but not in case of increase. It is not provided. The interest word is not mentioned in case of the increase. So basically, it is favor of the allotee. Then the fifth one is it provides for the responsibility of the promoter to comply with the terms and conditions imposed by the local authority, subject to which plans are sanctioned, and to obtain the completion certificate before handing over the possession of the apartment to the allotee. So promoter has to comply with all the GDCR requirements, subject to which the local authority has granted the permission. Time is essence. You see, the time is essence, and it has been told that the promoter has to complete the project in a timely manner, and allotee has to make the payment in a timely manner. Promoter has to declare the FSI available on land, FSI with additional premium, and actual FSI utilized by him for the purpose of construction of the particular building. You can go through the circular number 15, wherein they have mentioned A, B, and C to understand what exactly is the FSI available on land, FSI with premium plus FSI utilized. Then interest payable by the promoter for delay in handing over, and by the allottee in making the payment. So both way the interest has to be mentioned. In absence of any clause under this model agreement for sale, it has to be MCLR plus 2% per annum. Then it provides for the right to allotee to demand the refund along with the interest on the delay of possession. That is, again, we can link this particular clause with the section 17. Then right to promoter to terminate the agreement upon 3 consecutive default in the payment of installment by the allotee after giving the 15 days notice and subject to refund of money collected within 30 days of refund. So if any of the allotee is making default and there are 3 consecutive default in the payment of installment, Then promoter has had to cancel and terminate the particular agreement by giving the 15 days notice to the allottee. If allottee does not make good the default, then he can terminate the particular agreement and has to refund the money within 30 days of the termination. It provides for the structure, fixtures, and fittings with regard to flooring and sanitary fittings and amenities. As I mentioned earlier, what is promised has to be reduced in the writing in the agreement for sale. It cannot be only in the browser. In the agreement for sale, also he has to mention what kind of the flooring and what kind of sanitary fittings he is going to provide. What kind of amenities are there has to be provided. So, what was the loophole in the earlier system has been plugged here by way of reducing the things in the writing. Then he has to mention the date of possession of the apartment to the allottee. So most of the cases, the delay in the project will be triggered from this date. If there is any delay, then delay and interest calculation will trigger from this date. So it is very important that at the time of registration, promoter carefully analyzes the his future progress and then put the date of possession here. Then within 7 days of receipt of completion certificate and full payment as per the agreement, promoter shall offer in writing to the allottee to take the possession of the apartment. And promoter and allottee will have 3 months time uh, from the issue of such notice. Future maintenance charges will be borne by the allottee if there is any failure on the part of the allottee to take possession within 15 days. Structural defect liability for a period of 5 years from the date of handing over of the possession. It includes structural defects or defects on account of workmanship, quality, or provision of services. However, there is no liability on the promoter if he proves that the defect on the workmanship, quality, or provision of service was beyond his control or cannot attributable to him. Still, the structural defects exist. Then there is a responsibility of the allottee to join the hands in forming the society or company or association and sign and execute all the applications, etc. Allottee has to pay monthly maintenance charges on a regular basis. He has to pay his respective share of stamp duty and registration charges when the entire structure of the building is being transferred in the society or company or any kind of association of allottee. There are certain representations and warranties which the promoter has to mention in the agreement for sale. The one is the clear and marketable title he has. He has to attach the title clear report. All necessary permission from local authority to carry out the constructions are there. There is no income on the project on land or project except those disclosed in the title report. There are no litigation pending before any court of law with respect to the project of land or particular project. Promoter has not entered into agreement for sale with any other party for the same apartment. It used to happen in earlier days when one unit has been sold to 2 or 3 parties. So here the liability is fixed in words in writing. Now there are certain things which are required to be done by the allottee as well. He has to maintain the apartment in good conditions. He should not store any hazardous or dangerous product goods. He does not have any right to demolish or alter any part of the building or alter any elevation of the building. He should not act which may render any insurance of the project of land or building to be void or voidable. He has to pay, he has to maintain cleanliness, he has to pay maintenance charges, government and other dues on time. He has to observe and follow all rules and bylaws of the association which has been formed after the handing over of the building. He has to allow the promoter or his agent to enter into the land or building to view and examine the state of condition thereof. Promoter shall not mortgage or create charge on the apartment if any charge or mortgage is already created. It shall not affect the right and interest of the allottee. The agreement, this agreement is an entire agreement. And as I mentioned earlier, as mentioned in rule 9, sub rule 2, what I'm saying is we are linking now. See, in the entire agreement is already been mentioned in rule 9, sub rule 2, but now it has been executed by way of putting this clause into the annex array. It is saying that it supersedes any agreement, allotment letter, correspondence, or arrangements, whether oral or written between the parties. Any amendment into the agreement for sale has to be done by way of consent of both the parties. Proportionate share. You will see proportionate share, undivided proportionate area, undivided proportionate common area. Proportionate share to be paid by the allottee. So what is meant by proportionate share is also defined in the model agreement. Proportionate share referred to in the agreement shall be computed with reference to the carpet area allocated to the allottee with reference to the total carpet area. The place where this agreement for sale is executed, name and addresses of and email IDs of the promoter as well as the allottees for sending notices to each other. In case of joint allottees, the one whose name is appearing first in the model agreement for sale, if notice is sent to him only or her only, it will be a sufficient notice. What are the stamp duty and registration charges? Those charges will be borne by the allottee. Any dispute in the matter will be referred to the RERA authority and the courts which will have jurisdiction. All these points has to be mentioned in the standard model agreement for sale. What are the things which are required to be attached to the agreement for sale? First one is the Schedule A, the description of the apartment. What are the Chaturseema, whatever are the Chaturseema, left, right, so south, north, sorry, west, east, whatever is there, it has to be mentioned in the description. Floor plan of the apartment has to be attached by way of Schedule B. In Annexure 1A, authenticated copies of plan and specification approved by authority has to be attached. In Annexure B, authenticated a copy of the RERA registration certificate is to be attached. In Annexure C, specification and amenities of the apartment, which we already discussed earlier, is to be annexed in Annexure C. So friends, so far we understand agreement for sale. Now in a very limited time, I will quickly go through the sale deed, that is transfer of title. What is meaning of sale? In RERA, sale deed has not been mentioned anywhere, but we can take the reference of sale from the Transfer of Property Act. Section 54 is saying that transfer of ownership in promised to be paid or partly promised. So basically, in the sale deed, legal document, it is a legal document where transfer is in terms of absolute. There, agreement for sale is a conditional transfer. Here, the sale deed is an absolute transfer of the property to the allottee. The rights in interest in the property are required by the allottee upon the execution of the sale deed. So it is an immediate transfer. There is no time lag like we have seen in the agreement for sale. That is why I am saying it is less risky, but it is more important. Now we see the section 17 of the transfer of title. The promoter shall execute the registered conveyance deed in favor of the allottee along with the undivided proportionate title in the common areas to the association of allottee or competent authority as the case may be, and hand over the physical person. So what are the two things required to be done by the promoter? First, he will to register the conveyance deed, and the second, he has to hand over the physical possession of the plot, apartment or building as the case may be to the allottees along with the common area to the association of the allottees. Where and the other title document pertaining thereto within a specified period. Now we will look into the proviso. Provided that in the absence of any local law conveyance deed in the favor of the allottee or the association of allottee or the competent authority as the case may be, under this section shall be carried out by the promoter within 3 months from the date of issue of the completion certificate. So in Gujarat also, because in GOFA there is no mention of the time period, we are taking the reference of section 17 subsection 1 proviso first, that within 3 months of the issue obtaining the completion certificate, he has to transfer the register, make the registered conveyance, provided all full payment is received from the allottee. Obviously, he has to register the conveyance deed in favor of allottee, and he has to hand over the physical possession of the unit to the allottee. Section 17 subsection 2, after obtaining the completion certificate and handing over the physical possession to the allottee, it shall be the responsibility of the promoter to hand over the necessary documents, plans, including common areas, to the association of the allottee or competent authority as the case may be, local law. Provided in absence of any local law, the promoter shall hand over the necessary document, plan, including common areas, to the association of allottee within 30 days after obtaining the occupancy certificate, completion certificate. Now we have seen already the central act. Now what are the orders passed so far which are related to title, transfer of title? Transfer of title to the allottee, it is very straightforward, but in case of transfer of common areas and amenities to the allottee, there were a lot of debates going on when at the initial stages, and there were a lot of representations sent by the CRETA and other builder bodies that what could be the standard form for forming the association of allottee. Section 17 of RERA only mentions that formation of the company or society, only says the association of allottee. It does not mention it has to be by which way. So by way of this order 13, Gujarat RERA earlier on 9th of July 2018 said that association of allottee cannot be formed in these three particular manner. Section 8 company, because the object of the Section 8 company is to promote the commerce, art, science, sports, education, research, social welfare, charity, protection of environment, etc. Promoter cannot form association of allottee as per Society Registration Act 1816 because the The objects of the Society under Registration Act 1860 is the promotion of literature, science, fine arts, or diffusion of useful knowledge or political education or charitable purpose. Then authority said the promoter cannot form the association of allottee by way of LLP Act 2008, sorry, because the object of LLP Act 2008 is to carry out the lawful business with a view to earning profit. On the basis of these three pleas, they said that the object of the association of allottee is to maintain the building and to take the to collect the maintenance charges on a monthly basis or whatever period decided, and to maintain the building. These three particular type of entity are not satisfying the primary object, and therefore an association of allottee cannot be formed by these three entities. Then in the same circular, they have said that they have taken the reference of the cooperative society, Gujarat Cooperative Society Act. They have said that white circular dated 30th June 2017, the register of cooperative society in Gujarat state has provided certain guidelines for the registration of cooperating housing service societies. In its second para, it has mentioned that the object of such societies may be for the maintenance, repair, and provide service in respect of the water, gutter, cleanliness, security, lift, etc. There are detailed guidelines for forming the service society for the premises, including the flat, tenement, bungalow, row house, shops, showrooms, and industrial for sale and offices. So they said the objects what are mentioned in the section 17, what are objects are mentioned in the Gujarat in RERA are being achieved by forming this particular kind of society. Also, they have mentioned that section 4 read with section 7 of Gujarat Cooperative Societies Act 1961 clearly lays down the societies with similar objects as are in RERA Act, as I mentioned, and it requires to be compulsorily formed and registered under the particular act. That means Gujarat Cooperative Societies Act, unless it is exempted under section 7, which is by way of a notification by the state government. So by way of this particular argument, what Gujarat RERA on order 13 dated 9 July 2018 has said that it is directed that as per the requirement of section 17 of the RERA, the association of allottee could not be formed by way of company because it has different objectives. LLP is a different objective, society is a different objective. It mentioned that it has to be by way of Gujarat Cooperative Society 1961 as per the earlier circular. Now, after that, if you see in Gujarat Cooperative Association, there has to be 10 members. Now, if a promoter is having 8 apartment or more than 8 apartment, then he has to register project with RERA. But in case of society, you have to have 10 members. So promoters are facing difficulties while forming the association of allottee by way of society as per Gujarat Cooperating Housing Society Act 1961. So they made several representations, and in order to mitigate that particular hardships, Order 18 was furnished by Gujarat RERA Authority dated 18 December 2018. What it had mentioned is that in view of the representation regarding the hardship in compliance being faced by the promoters, according to Order 13, which we already seen in the earlier slide, after due consideration, the Gujarat RERA has issued Order number 18, means this order, stating herein that association of allottees could be formed by way of society under Gujarat Cooperative Society Act 1961 or as a company under Section 8 of the Companies Act 2013. So this was the presentation from my end. Hello.
Yeah. Thank you, CA Mohit Adatiya sir, for the excellent deliberation and comprehensive coverage of the topic given to you, allotted to you today also, and also on the day 2 of the RERA webinar. So I request CA Vishal P. Doshi, Regional Council Member, WRC, to give a formal vote of thanks to the faculty.
It's my privilege to thank Mohit Bhai. Mohit Bhai, it was indeed a very insightful presentation on the topic transfer of title under Section 17 of RERA and agreement for sale under Section 13. I think RERA is a great professional opportunity for chartered accountants, and this series gives us a good insight into such opportunities. Mohit Bhai, Your presentation has enlightened participants on the nuances of the topic. On behalf of WRC and on my personal behalf, I once again thank you for sharing your valuable time and apprising us on the subject, and request everyone to give a round of applause from wherever you are.
Thank you very much.
Thank you, Mohit bhai.
Thank you.
So next topic for the day is CA certificates under RERA, financial management under RERA, 70/30 provisions, 70/30 issue, provision under RERA and project that mandate financial management, maintenance of records, opening operation of project, and issue in certificate in Form 3 and precautions to be taken. The same would be taken by CA Niraj Shah and CA Sarthak Bansali. I once again request CA Vishal Doshi to kindly introduce these speakers to our August gallery.
Yeah, thank you. Thank you, Aditya. It's my privilege to introduce the speakers of the second session of the day. CA Niraj Shah is a chartered accountant and also a qualified ISA. He is a partner in the firm Ranpura and Shah. He has also added to his professional base by undergoing various certificate courses on valuation, GST, and concurrent audits. He's a finance professional who is well versed in project financing, loan syndication, MSME subsidy, and other government benefits, statutory audit of corporate compliance with corporate laws, information systems audit, management consultancy system incorporation in MSME units, real estate project planning, and data consultancy, and also providing services to a wide spectrum of clientele of the firm. He has taken lectures at various forums on RERA and GST. He is a young and dynamic individual with an extraordinary approach to cater client needs and addresses them with a simple, applicable solutions. So I welcome Niraj bhai on behalf of WRC. Friends, our next speaker with Niraj bhai is Sarthak bhai Bansali, who is a fellow chartered accountant and a RERA expert. He is a qualified LLB and FCA and practices in the name of SS Bansali and Company. And his expertise is real estate laws. He has scored the highest mark in the ISCA subject across India in CA final. I think so that is really credit worthy. He's covering such a topic. he has also been a rank holder throughout LLB. Sarthak bhai has co-authored the landmark book on Gujarat RERA, published by the Ahmedabad branch of ICAI on e-filing guide. He is a frequent publisher of articles in Tax Guru and a distinguished faculty. He has taken various lectures, including at the ICAI, CA Associations, GIHED, and ARA. Sarthak bhai also enjoys teaching and nurturing new talent and is a visiting faculty with Ahmedabad University and Shanti Business School. He has, prior to his firm, SS Bansali and Company, gained a rich experience of the construction industry, having worked in L&T as a manager. So with these words, I welcome Sarthak bhai to this August gathering, and I hand over the session to Niraj bhai and Sarthak bhai.
Thank you, sir. Thank you, Vishal bhai, for the introduction. Niraj bhai, if you'll allow, I'll like to start with Form 3 first.
Yeah, so I think it would be allowed by coordinator. You will be starting first session now for Form 3. Aditya sir, please allow Sarthak sir to share the screen instead of mine.
Is my screen visible?
Yes, sir.
Yes, Sarthak.
Yes, sir.
Before I begin, the topic that is interested to me today is basically Form 3. So Form 3 is something that we all do for, we have been doing this for a while now. So I'll like to touch upon a few provisions first, and then get into what roles are to be defined by what, and what details and what basic nitty-gritties are required to be undertaken while issuing a Form 3. So let us begin. Let us get into it right away. So the first thing that we need to understand, where does this Form 3 come from? Form 3 basically comes from section 42LD. So 42LD in the RERA Act talks about that 70% of the amounts realized for the real estate project from the allottees from time to time shall be deposited in a separate account. So as we are all aware, 42LD says 70% जो भी पैसा है you deposit in a separate account. Further, the provision to 42LD says, provided that the amounts from separate account shall be withdrawn by the promoter after it is certified by an engineer, architect, and a chartered accountant in practice, that the withdrawal is in proportion to the percentage of completion of the project. So here is where the role of a chartered accountant in practice comes into. So Form 3 basically is this provision to 42LD talks about what in practice we know as Form 3. So deposit 70% of the realized amount into a separate bank account, and the withdrawal from that separate bank account has to be certified by a engineer, architect, and a chartered accountant in practice. So I've just summarized this. What does so requirement of Form 3, where does it arise from, and what does the Act, the rules, and the regulations talk about? So Act, it is pretty straightforward. You deposit in a separate account and the withdrawal as per the Form 3 withdrawal limit. Coming to the rules, Gujarat rules talk about there are two rules particularly which talk about withdrawals which impact Form 3 in a manner. So I'll talk about the first rule, that is Rule 3, Sub-Rule 6. It talks about the promoter shall disclose the means of financing. So here is where the means of financing has been brought in. That shall be taken up, covered up in the next session. The real estate project along with the cost already incurred and paid by the promoter out of the estimate cost of the real estate project duly certified and signed by the chartered accountant. So means of financing that is provided to the authority is a mirror of the Form 3 that has been provided, and then it is further expanded by giving different bifurcations of the estimate that is to be done. Next comes Rule 5, that is Sub-Rule 1 and Sub-Rule 2. So what these two sub-rules talk about is, at the outset, the promoter shall be entitled to withdraw from funds from the separate account to the extent of the cost already incurred and paid by the promoter. So this talks of whatever has been already incurred and paid, the promoter can withdraw that. This has to be certified by the chartered accountant. Sub-Rule 2 talks about the cost of the land. So whatever cost of the land has been incurred and paid again can be withdrawn as per Sub-Rule 2. So first sub-rule and second sub-rule basically talk about whatever is incurred and paid in terms of land cost, in terms of construction cost can be withdrawn, which is withdrawal is allowed after, of course, certification by a chartered accountant in Form 3. Sub-Rule 3 and Sub-Rule 4, this is again of Rule 5, talks of the promoter shall be entitled to withdraw the balance amount other than those mentioned in Sub-Rule 1 and Sub-Rule 2 from the separate account only in proportion to the percentage of completion of the project. So 1 and 2 deal with a situation where amount already incurred and paid for land and construction prior to registration can be withdrawn, and Sub-Rule 3 talks of that the further withdrawals will be only in proportion to the completion of percentage of completion of the project. Then Sub-Rule 4 says that the balance amount as mentioned in Sub-Rule 3 above shall be withdrawn by the promoter from the separate account after it is certified, 1 by an engineer, 2 by an architect, and 3 by a chartered accountant in practice. So basically these are the provisions from where the entire teeth of Form 3 comes into. To summarize this, we have already seen GUJRERA rules. It gives 4 points basically: disclose cost that is already incurred before the registration process, provide withdrawal limit for cost incurred and paid before registration, provide withdrawal limit for land costs not already incurred and paid during registration, and provide withdrawal limit in proportion to percentage of completion of the project until the completion certificate is obtained. So once completion certificate is obtained, then entire amount can be withdrawn, and essentially the requirement of Form 3 is not there then. Moving on to the the regulations. So first regulation, the first Form 1, 2 and 3 were provided by circular. Of course, they were withdrawn. Then came in the regulations, that is back in 2017. 7 September 2017 is the date. Then there was Amendment 2, 2018, and the final Amendment 5 that we know as of now is 31st May 2019. So this is Amendment 5 gives us the final, which the Form 3 format which is available as of today. So Amendment 5 basically changed Form 2 and Form 3. We'll not go into the history of it, what was there before. We'll just look at what is as available today. So here I've summarized basically what regulation asks for in the Form 3. So Form 3, basically, if you look at the column, RERA Act, basically only 2 things, regulations 4 things, and the rules only 4 things, and regulation has expanded the scope of the Form 3 very much. So first regulation talks about the estimate and incurred and paid, that we all know. So I'm not going through all of these. Why I've highlighted these certain aspects of these Form 3 is these are the red ones basically are the points which are basically not envisaged in the act or the rules. So this is something that the Gujarat RERA authority basically has come up with, that okay, along with what is prescribed in the RERA Act, what is prescribed in the rules, these are the additional things that we also require that a chartered accountant needs to certify. So a lot of emphasis, lot of thrust and lot of trust has been put upon all of us by the authority by asking us to certify certain things which are not basically in our subject area expertise. So if you look at all of these things which are highlighted in red, estimates, receivables of the projects, coherence from Form 1 and 2, unit-wise carpet area details, status, that is booked and unbooked, unit amounts expected, date of agreement to sell, incumbent status, allottee name, KYC and mobile number, and parking details. So all of these details are basically that you and I as chartered accountants are not an expert in, but we have to rely upon certain other experts upon the promoter and then provide our Form 3. This is, as I always say, circular number 2. This is one of the most important circulars that you need to understand and learn by heart if you need to certify even a single Form 3 for Gujarat RERA. So this is a very extensive and a very well thought of circular that was brought out in 2017, hasn't lost its charm since 2017 because it provides a lot of clarifications that any chartered accountant would require while signing. So we'll just go through the major bullet points. It's a long circular. I would suggest that you go through it entirely. First, the indexation of the land cost based on registration of land. So what circular 2 allowed was indexation of the land cost. If you had bought a land, say in 2002, 2003, probably the value of that would not be as, the market value would have appreciated much. So what the RERA authority did is allowed indexation based on what we use in income tax. So may not bring it up to the market value, but still provided some additional cost that the promoter could withdraw. Clarification on land cost in rehabilitation and redevelopment cases was provided in circular 2. Clause 7 has specifically been clarified because there were a lot of confusion with this clause 7. We'll look at what clause 7 is, but it basically says that amounts withdrawn from separate bank account as per books of accounts and bank statement of the separate bank account. When we look at Form 7, I think this would make more sense. Pass-through charges ideally should not be deposited in RERA account is what circular 2 says. Indirect taxes should not be deposited in RERA account. Income tax is not a project cost. RERA account should be no lien. So of course, after this, banking directions has also been issued to provide further clarity. There is no end use restriction once a limit is available. Cancellation amounts can be withdrawn from the RERA account. So lots of promoter keep on asking, a booking has been cancelled. Where do we withdraw this from? Can we withdraw from RERA account? So Circular 2 answers it. And CA certificate shall be cumulative since inception. So this is the most important thing that all of us need to understand, that each certificate that we provide is a cumulative certificate. It's not from one quarter to another. So we are supposed to provide Form 3 every quarter while filing quarterly progress reports. So say today in August you have already certified one CA certificate Form 3. The next certificate that you 3 months after when you need to certify, you have to take the data from the beginning and the inception of the project and not just from August till the next cutoff date. So CA certificate shall be cumulative since inception. Before we get into the formats and all of them, I would like to throw light of what the authority is doing with the data that we provide. So of course it's the promoter's data, but we are certifying it and we are providing it to the authority, and what the authority is doing with it. So the authority has already started to put it to good use. Lots of data analytics has been done by the authority. Lots of data analysis is being done, and even projections are being made based on what data we provide. So registration, what registrations, how many projects are coming up, what is the investment size, what are the total number of units, how much projects are completed within time. This data is very critical, very important. What is the sold and unsold inventory in each city? So these data are being used very seriously by the authority, and we should ensure that the data that we provide is properly sanitized, it is properly used and properly provided to the authority. So this particular slide is taken from the authority, and it says that inventory booking in Surat. So residential, green is the booked one and red is the unbooked. So lots of if you look at, lots of inventory is lying in the shops category, around 40,000 units, and the booked is only 15,000. So this is something that the promoters can also use in while planning for the next projects. So Form 3 amendment, this is what we talked about. I would like to pause here for a moment. If you have any questions, please stop me there and then ask. You can ask in the chat box or wherever. But please let me know if I'm going too fast or if there's something that you need me to elaborate more on. Coming back to Amendment 5. So this is 31st May 2019, where the regulation were amended again, the 5th amendment, in which the certificates to be issued by architect, engineer and chartered accountant that are appointed by the promoter for the project registration, alteration, extension, QPR, shall be substituted, and they were made electronic. So particularly Form 3 was made electronic. Form 1 and 2 are still physical certificates that you need to upload on the web portal. The certifying professional has to affix his digital certificate using utility on GUJRERA portal accordingly. And this was made applicable from 8th June 2019. Accordingly, Form 2 and Form 3 have been substituted and new formats have been modified. So let us move on to the format. So this I'm sure you have looked at this format and you are well aware of this format. I'll still go through some of the very key points in detail. If you would like to elaborate on certain points, if you like me to elaborate on certain points, please let me know. First part of the Form 3, it talks of the land cost. So 1 and A. So I'm talking about point number 1 and A. So acquisition cost of land. So this acquisition cost of land, when Form 3 was notified, it was basically acquisition cost only. Then circular number 2 came, which says, okay, you can also index this cost of land. And then there was further circulars, circular number 11, which said, okay, even prevailing ASR value you can take. And then finally, through this amendment number 5, the RERA authority also brought in market value of land as determined by the government approved valuer. So first, acquisition cost of land to be index cost of acquisition, that was brought in by circular 2, prevailing ASR or gentry rate, circular 11, and then finally market. So either of these three you can use as acquisition cost of land. Analysis, circular 2 brought in optional indexation of land. 11 said that ASR, gentry rates or index cost of land, whichever is higher you need to take. And now the regulation says that any three of the above can be taken as a land value. Why this market value of land was allowed is because of Rule 3.6, which says that the promoter shall disclose estimate cost of real estate project as envisaged by the promoter by bifurcating the same into market value of land as determined by the government approved valuer. So this is where the authority had thought upon how to incorporate these changes into the rules, and then finally brought it by way of amendment number 5, wherein market value of land was added. What this does essentially is gives a planning tool to the promoter. Say, I'll take an example to explain this to you. Say the value of land is 2 crores in 2002. The acquired, the dastaved or the sale deed value. Now, if you index this cost, probably it would come to somewhere around 5 to 6 crores as on today. The gentry rate would be somewhere around 1.5 crores. The market value, however, would be probably 25 crores. So in such cases, you can take any of the three based on what the promoter estimates the further cash flows to be. So as soon as you take market value, index cost of acquisition or the ASR rate, you're deviating from the basic accounting that we do. So if you look at your data that the promoter is providing probably in Tally or any other software, it will have a cost of land as 2 crores only, the actual cost of the sale deed. But when we are certifying this, any of the three other options, you are probably deviating from the accounting that has been done in the books of accounts of the promoter. So when your actual cost is say 2 crores, whatever is incurred and paid is also 2 crores, then is it okay to certify say 25 crores in this case? I'll just look, I think there's a question. Yeah, so there's a question. If we take index cost, market value of land, how to certify incurred and paid column? So very good question, which I was getting to. The idea is basically this certificate deviates from the general accounting principles at many places, but because this is a certificate which is provided as per the regulations that have been notified under a statute, whatever deviations that you're taking need to be written down in a note. So probably if I would take market value say 25 crores as estimate, and in order to provide that benefit of withdrawal of that funds, if I'm certifying incurred and paid as 25 crores, I would write a note to that extent saying that 25 crores is the value estimated by the government approved valuer. However, the cost incurred and paid as per the books of accounts as provided by the management is only 2 crores. So whatever deviations that we are taking from generally accepted accounting principles, we need to write them as a note. And why deviations I am taking is because it is allowed by the regulator. It is clearly stated that you may take any of these three options. But to us as chartered accountants, when we are taking such deviations, please make sure you write notes detailed notes of whatever you're taking. I hope this answers your question. Moving on, this is amount of premium payable to obtain development rights, FSI, additional FSI. So whatever FSI and additional payments that you're making to the local body, the local authority, that all need to be certified here. Make sure that you also take, so generally what happens is where amounts are greater than 25 lakhs, the authority, the local authority gives an option to the promoter to pay the further FSI payments in installments. So they'll ask for say 25% of the entire FSI payment. So that 3 crores is the amount of FSI that needs to be paid, chargeable FSI. So they'll say 25% you pay upfront, and the remaining will provide you installments of 3 months with an interest component. So make sure while certifying, while estimating, the future payments are also taken into account, and all of those interests as well as FSI payments are taken into account here. Acquisition cost of TDR. So TDR cost is basically any transferable development rights that you are purchasing from another developer. So heritage property, heritage redevelopment or slum redevelopment. Usually any developer gets TDR, transferable TDR in these cases here locally. If it is purchased by your promoter, the promoter for which you are giving out this form 3, then such cost needs to be put in here. Then 1D, which is fairly simple, any payment to statutory authorities in the form of stamp duty, transfer fee, registration fee needs to be put in here. And 1E is land premium, as if it is taken on a land premium system. So these are the basic components other than the acquisition cost of land that need to be filled in the form 3. Coming on to the redevelopment rehabilitation scheme. So basically this had lots of issue previously. Then there were certain systemic changes that were made, and then in the current scheme of things, there's an option to tick mark. There's a small icon here where you can, it's a checkbox where you can tick mark, and then you can activate this entire redevelopment rehabilitation scheme portion. So basically what happens is whenever there's a redevelopment or rehabilitation scheme and old unit holders are also getting new units, typically in an area sharing development agreement, in such cases, the cost of construction that is incurred for the previous allottees, or say the landowners in this case, need to be factored in this portion. So say it's a project of 100 crores and there are 10 previous units that need to be given a unit each. So then out of the 100 units that are being constructed, 10 units are basically given to the previous landowners. In those cases, the cost of construction, say 10 crores in this case, if I divide it proportionately and the carpet area of each unit is same, then 10 crores needs to be put in here. Redevelopment and rehabilitation estimated cost of construction. And then as and when the cost of construction is incurred and paid, proportionate cost needs to be taken here. So this is what I talked about. Applicable, yes or no. So by default it's no. If you tick on it, it comes as yes. So option to tick in case of redevelopment. This is basically what I said. The option to provide details in estimated column is provided one time only, and it is non-changeable once submitted. So unless there's an alteration, once you have put these values in, it cannot be changed for the rest of the project. Then there is so this part F1, 2, 3, and 4. So this is part of the redevelopment one. Cost of clearance of land and removal of illegal and legal occupants, and cost of ASR linked premium fees chargeable. So these are all part of cost for part of redevelopment or rehabilitation projects. So all of these put together land cost, FSI, TDR, stamp duties, and redevelopment costs. All of these put together form part of the total land cost. So this is what we're looking at, subtotal of land cost. Then comes in the development or cost of construction. So 2A1. So this part is essentially estimated cost of construction as certified by the engineer, column A. So this column gets pre-filled. Whatever cost the engineer has estimated for the construction of the project, that amount gets auto-populated in this column. Against that, actual cost of construction incurred as per books of accounts as verified by the CA. So against engineer's estimate cost, whatever is incurred and paid, that you need to provide here. So an engineer basically, whenever he estimates cost of construction, he'll take into consideration three components. Those are labor, material, and plant and machinery. So whatever costs that you see in the books of accounts, which are in the heads of labor, material, and plant and machinery, you need to certify here in 2A2. 2A3 is all the other costs that are related to the projects. So on-site expenditures such as salaries, consultant fee, site overheads, development works, cost of services, all of these costs have to be clubbed into on-site expenditure. Then comes 2B, which is payment of taxes, cess, fees, charges, premium, interest to any statutory authority. So although this talks of payment of taxes, it does not include taxes such as income tax. So whenever you look at payment of taxes, it has to be in relation to the development cost. So if you look at this, the heading is development cost, cost of construction. Income tax basically is not a tax paid for development or construction. Only costs relating to the development of the project need to be provided here. So payment of taxes, what would come is payment of any duties to the statutory authorities, scrutiny fees, plan amalgamation fees, plan changes fees, costs that are incurred at the time of view. So all of those payments that are made to the local authorities can be included here. GST, particularly in case of residential, so RREP, residential real estate projects, where the input tax credit is disallowed. In such cases, typically, what we see is promoters club those costs in the nature of which it is incurred. So a GST of 28% incurred on cement would probably be categorized as cement costs only, and hence included in material. So GST ineligible expenses, you can put it as 2A2 actual cost of construction if it relates to those. If it relates to on-site expenditure, you can categorize them there. And I've also seen practices where chartered accountants put it in 2B, payment of taxes. So it's upon your professional judgment, but whatever you do, you can write a note to that extent. Point number 2C, interest payable to financial institution. So any interest that has been incurred for the development of the project has to be included here. So it can also be interest. Of course, it can be interest from banks, it can be interest from financial institution, it can be interest from money lenders, and it can be interest from in the form of unsecured loans. So all of those interest costs you can provide here. One thing that we need to note is whenever you're taking the benefit of an interest cost, you're adding to the cost of the project, you have to disclose all of these details to the RERA authority. So when I say disclose details, it is in this format. So details of project loan and lenders, I'm skipping one slide, I'll come back to the previous one. But details of project loan and lenders. So whenever I'm claiming an interest as an expense in form 3, I also have to provide details of project loan and lenders. So if in unsecured loans interest I'm claiming as an expense, then lender name, say unsecured loans, and all of the details of those parties has to be provided to the authority. Coming back to the previous slide, point number 2, estimate total cost. So this is a summation of column A, that is the first column, land and development, total of estimate. Point number 3 is total cost incurred and paid. So this is the total of column number B, that is incurred and paid. Point number 4, 5, and 6 are basically auto-filled, auto-populated. These are basically percentages. Say point number 5 is proportion. So it is 60% of the, so 3 by 2 will give you 60%. Point number 6 is again 2 into 5. So it will again give you incurred and paid cost. Point number 7 is what is important here that you need to fill. Less amount withdrawn till date of the certificate as per books of accounts and bank statement. So this is the reference to this also can be found out in circular number 2. But I would like to lay emphasis on this portion because not only have you to look at books of the bank statement of this particular RERA account on separate account, but you also need to look if the promoter has made any default in the deposit. So I'll give you an example. Say if the promoter does not deposit any amount in the separate bank account, so of course when he's not depositing, the withdrawal will also be 0. So in this case, if instead of 14 the deposit and withdrawal is 0, then I would essentially give the promoter an additional, because this point number 8 talks about net amount which can be withdrawn from the designated bank account. So this is essentially 60 minus 14, that is 46. If I certify this as 0, then essentially because the promoter has not deposited what he should have, I'm giving him an additional withdrawal limit. So I'm giving him 60 rupees instead of 46 rupees. So make sure that whenever you certify, you not only look at the bank statement, you also ensure that the promoter has deposited the amounts in the RERA bank account, and if he is not deposited, still you certify the amount that he should have deposited as a withdrawal. So if he has, say, let me repeat, if the promoter has not deposited, you should certify amount that he should have deposited and withdrawn as a point number 7 item, where that is amount withdrawn till date of this certificate. I hope I'm basically, the point of me saying this is you should not reward the promoter for non-compliance. When you're issuing a form 3, not only are you responsible to the promoter, you are also acting as a trustee for all the stakeholders by providing only correct amount that can be withdrawn from the designated bank account. Coming to this, we have already seen details of project loans and lenders, and then details of the RERA account. So the separate bank account that is required to be opened under 42LD, those details you need to provide: name of the account, opening closing balances, and the transactions during the period. So entire amount deposited during the period and withdrawn during the period, that needs to be provided. The authority also came up with guidances. Guidance note number 1. This we have already taken care of. So interest, whenever this we have already talked, I'm going to skip this. Additional information for ongoing projects. Although it's for ongoing projects, we still certify it in for the new projects also. These are all basically pre-filled figures. So it is system generated, system calculated. But what you need to understand is the criticality of point 5. So if the amount deposited in designate account, if 4 is greater than 1, which means if estimated receivables for ongoing projects is greater than the estimated balance cost of completion. So if the receivable is more than the cost, then 70%. So you need to deposit only 70%. But in the reverse case, when the estimated cost to complete the project is less than the estimated receivables of the ongoing project, then you need to deposit 100% of the receivables. So this, although auto populated, if it is 100%, you need to alarm the promoter. You need to tell him that, boss, not only 70%, the entire 100% of the collection that you receive from allottees has to be deposited in the RERA account and withdrawn only through the withdrawal mechanism by looking at the CA certificate. The physical progress of the project. So this talks about coherence. The physical progress of the project as certified by architect form 1 and engineer form 2 seems in coherence with actual expenditure incurred and paid considering project specification. So here a chartered accountant is expected to say if the form 1 and form 2 seems in coherence, yes or no. If the answer is no, that they are not in coherence, then the explanation and the reasons are required to be taken from the promoter and then provided. So this has to be provided by the promoter. To give you an example of this, form number 1, excavation 100% is completed. There are 3 basements and 25% is completed. So from this form 1, what I can make out is the excavation is done and the 3rd basement is somewhat complete. Now when I look at form 2, out of the 3 crore estimate cost, 2.72 crores is incurred. So around 91% is completed. So something seems off, considering that out of the entire building, where only basement, 3rd level of basement is complete, my 91% cost is certified as completed. If I look at form 3 again, around 39-40 lakh cost is incurred. So there is some lack of coherence in form 1 and 2, and in such cases I need to report it to the authority. Why I have highlighted this particular is notes to certificate. So make sure whenever you are certifying, you write enough notes, whatever assumptions, whatever deviations from the standard accounting policies I have taken, please write them down in notes so that the reader, the user of the certificate, knows what has happened while you are certifying this certificate. So here form 3 essentially gets over. The only part that is remaining is the annexure. So form 3 also has an annexure, annexure A, which provides details of the inventory. So inventory in terms of all the units of the project which are to be sold. So the first part of this is fairly simple. Block type A, 101 unit. It's a residential unit which has carpet area of 45.5 square meters. 2.3 square meters is the balcony area. It is booked. So status is booked or unbooked, booked, and the unit amount is 50 lakhs, out of which 6 lakhs I have received. So for me, 6 lakhs is the amount that I need to cross verify with the books of accounts. Then comes the difficult part. So date of agreement to sell. So whether agreement to sell has been registered for this unit. So yes, on 3rd 7/2018 the agreement was registered. So this talks about registered agreement to sell only and not notarized. Encumbrance status, whether any charge has been created on this. So yes, it has been created. What is the name of allottee? What KYC you are providing? What is the number of that KYC and the mobile number of the allottee? So all of these details you need to provide. And last, whether the unit is provided as a redeveloped unit or not. So this is the format of the annexure. If you look at it, most of the details are out of our subject area expertise, except for received amount. This you need to cross verify with the books of accounts. So when I say it is out of our subject area expertise, it means defining of rules becomes very critical. So if you look at form 3, estimate is something that we are not an expert of, so we need to rely on the promoter, auditors, experts. Incurred and paid is something that we need to verify from the books of accounts. So this is our role. This part is autofilled 2 to 6 and 8. This point number 7 we need to fill as an input field. This entire part, details of loan lenders, RERA bank state. So from the bank statement and the sanction letters and mortgage deed, we need to provide. So this, as a chartered accountant, we need to provide. This entire part is autofilled. When we talk of coherence, yes and no, we as chartered accountants need to answer, while the answer to no has to be taken from the promoter. Form 3A, so that is the annexure A to Form 3. This entire part, block type, flat number, whether it's residential, carpet area, and its status. This needs to be provided by the promoter, auditors, experts. Amount we need to verify from the agreement to sell or the allotment letter. Whatever amount is received needs to be verified from the books of accounts. Date of agreement to sell, we can verify from the agreement to sell itself. CA has to verify this encumbrance status from the mortgage deed. This entire part. So when I say verify from various documents, it needs to be understood that it has to be provided by the promoter and then verified by you as chartered accountants. So this entire part has to be verified from the allotment letter, agreement to sell, and the KYC. So PAN, Aadhaar, whatever is being provided needs to be provided to be verified here. Mobile number, of course, the promoter has to provide. You cannot verify the mobile numbers. So yeah, I hope this defining of roles is clear and how we need to go about certifying Form 3. Then there is a technical guide which is provided by the institute. This is a technical guidance for certification and audit under RERA Act 2016. I would just like to ask how much time do I have? I'll rush through things, or can I continue with this, or should I cut it short, sir?
I think Aniket sir is joining, or I'm not sure. So you will have time till 7. Niraj and
Yeah, I think Niraj bhai will also be requiring time for Form 5 and all. So I'll just rush through this. Anyways, this is part of the book. Yeah. So this is a technical guide. I've just put in the bullet points of what are the important chapters. I'm not going through them in detail, but what we have already talked about is essentially what this technical guide is. So based on the technical guide only, I have already explained to you most of the things which are provided previously. The third point is very important. The protection under SA 6200 using the work of an auditor's expert shall be available only to the extent of estimate of the total project cost. CA cannot claim protection for areas of certificate falling under accounting and auditing. So essentially what this technical guide says is wherever I've marked as auditors, experts, or the promoter is what we are relying upon someone else. So protection under SA 620 can be availed only in those cases. All the other areas, make sure you audit or properly verify all of these documents before certifying. Costs that are not to be considered as part of construction cost: admin costs, general admin costs, selling costs, R&D, idle depreciation, idle plant and machinery, cost of unconsumed material, advance payment of course because it is not incurred although it's paid, and then remuneration, interest on partners capital. Approach for certification, the approaches also. So this technical guide is a very well thought of document. If you get the time, do go through it. It also provides this approach of certification, how you need to approach the entire process. and to ensure that you get all the proper documents, all the proper data, and certify at the, it's a proper certificate that is given. Working papers, very important. So letter of engagement, all the relevant details certified by the promoter to be true. Whatever workings that you're doing, please make sure you keep a proper record of that. The certificates of the architect and the engineer, keep a record of those as well. Notes on assumptions. Of course, whatever assumptions you're taking, as I've already previously stated, do write a note on those, and note giving reasons why an evidence is accepted or rejected. So all of those details you need to keep as a part of your working papers. I would like to conclude this here. If you have any queries regarding Form 3, you could ask them probably now.
Mishra ji, are there any queries?
No, sir, because this question I am sir.
Okay. So I think the only query you had already taken during the presentation.
Right, sir. I would like, I would like ask Niraj bhai to probably take this session further.
Thank you, Sadak bhai. And now I'll be taking the second part of this session, that is the financial management under RERA. Okay. So can you allow me to share the screen? Yeah. Okay. Sir, my screen is visible?
Yes, sir.
Okay.
Okay,
So, yeah. Now the second part of the session would be the financial management under RERA. Okay. So I have bifurcated the financial management in two parts. That is one, the Chartered Accountant's report on means of finance, which has been the details for the said has been given by circular number 19, and banking discipline in operation of accounts. That is for that Gujarat RERA Bank Account Directions 2018 has been issued. So for part of means of finance, as per circular 19, they have mentioned that RERA authority has a power by virtue of section 37 to issue any direction from time to time, and which shall be binding on all the concerns. Okay. And they have also amended Rule 3.6 of GUJRERA rules, in which the Rule 3.6 says that the promoter shall disclose estimated cost of real estate project as investigated by the promoter by bifurcating the same into the market value of land, lease charges as determined by the government approved valuer, cost of construction, other costs, interest, tax, development, and other charges, and all other charges cost in relation to the project in two stages. That is before the application is made to the authority and subsequent to the grant of registration. By virtue of circular 19, they have added this: the means of financing the real estate project along with the cost already incurred and paid by the promoter out of the estimated cost of the real estate project duly certified and signed by the chartered accountant. This portion has been added by circular number 19, and they have given a limit. The projects which are having a project cost above 50 crore is required to follow required to maintain this means of financings. And by way of circular 21, they have reduced the limit to 25 crore, and they will even specify that in future it would be this means of finance would be applicable to all the projects. Okay. In addition to this, in Circular 19, they have even mentioned about the SAE Standard of Assurance Engagement 3400, from which specify what areas we need to the chartered account needs to see while reporting this means of finance. Okay, I'll go directly to Circular 19. Okay, so that we can go in detail what this Circular 19 specify. Okay. Okay. Here we have already discussed that the RERA authority has empowers through Section 37 for giving the additional details of means of finance. Okay, and as mentioned, as I mentioned, that Standard of Assurance Engagement 3400 of ICAI is there, which specify what things we need to take care while reporting or while issuing this certificate. Okay, and along with this, they have mentioned that the promoters are required to submit a separate certificate depicting details of their experience for carrying out this kind of similar kind of real estate project. And by this Circular 19, they have also given a specific format for reports on means of finance, and that is available in Excel utility. They have given to standardize the regulatory regime for this financial discipline for all the projects. So I'm going through the format they have given in this. They have given this Excel utility for means of finance. Okay. Okay. They have given an Excel utility for preparation of means of finance. Okay. Here we would I would like to highlight the points which we need to take care. That this is the Excel utility where we need to fill the details that includes land cost. It is divided into two parts. That is a cash outflow and cash inflow. Okay. So the part of cash outflow are land cost, construction cost, on-site expenditure, payment to statutory authority, interest payable for the project, and other costs related to the project. Okay. And the project inflow part includes promoters capital, project land disbursement, and other borrowed fund. Now they have given specific instruction. First, they have given a format in which only the white cell which is given, we can input the data over there only, and other data will be refilled. Then these are the various part of the format, that is a land cost, construction cost, and all, and the details which we are required to enter. This can be verified. This can be explained through this documentation. Now the cash outflow part, that is the land cost. Land cost we can identify it from the sale deed and agreement to sale development agreement, and which can easily available or which can be verified from Form 3. Then the other part is construction cost. Construction cost we can identify from the Form 2 issued by the engineer, that is certified by the expert, and the details for the same can be re-verified from Form 3. Other part is other site expenditure. other side expenditure which is mentioned in Form 3 also. Okay, for that we need to make an estimation based on the size of the project, what amount of on-site expenditure would be there, and we can take a management representation or estimation from the promoters also for identification of on-site expenditure. Then other part is for payment to statutory authority. The details for the same is already been explained in while Form 3, that is breakup of taxes and charges payable to statutory authority while taking any approvals or while taking a BU permission, and the same has also been verified from Form 3. Then finance cost is to be entered over there. This can be determined from the sanction letter and working of fund utilization from the fund utilization. Then other part is in Form 3 we are not taking part of other cost, but here we need to take the marketing and other expenditure which is not a part of Form 3, and for that we can take a estimation from management, and it is based on the size of the project and based on the past experience what admin expenses they are what percentage of admin expense they are having in a past projects. Then another outflow is repayment of borrowing. If any finance has been taken from banks or financial institution, so that is also part of cash outflow which we need to mention in the means of finance sheet. Then the other part is cash inflow. The cash inflow part includes the promoter's capital. The promoter's capital can be taken by as per estimation, and before applying for the project we can determine from the expenses already incurred by the promoter that we can identify from that. Then any borrowed from bank, then any borrowed from unsecured as a form of unsecured loan, and this we can check from any past we depend on past projects whether they are taking regularly any funding in their past projects or they have already taken any fund for the new project, and the unsecured loan taken in the past projects and their track records. And the main part is the receipt from the allottees, that is also make part of cash inflow. This we can for this we can take estimation from the management, and this estimation we need to check with regard to their past projects experience, the type of projects, the market, the demand in the market, price of the unit, and completion stage of the market. I'll just once again show you this input sheet for the cash flow. Here we have to enter land cost. The means of finance is to be divided in the proportionate to the project start date and to the project end date. So the cost and the cash outflow and the cash inflow is to be divided among the period of the project. So here it has been mentioned the land cost which can be here first thing is pre-RERA registration. This means before applying for registration whatever cost has been incurred, that we can identify from here, we can enter it here, and this amount which is this amount can be from a promoter's contribution or can be from the unsecured loan or bank finance which forms a part of cash inflow. Then this we can see that the land cost has been divided into, might be the land cost can be land cost is paid in the initial stage also, or there is a development agreement or land there is a installment of land payment, so that can be a part based and which can be identified from the development agreement as well as the purchase deed. Then here construction cost is to be defined, and we have to enter the construction cost over here. Then here the on-site expenditure, then payment to statutory authority, then interest payable for the project, and other costs that I have already mentioned that it is not forming part of Form 3, that is an admin expenditure and others. Then this sum up to the total project cost. Additionally, if we have taken any loan, then repayment of project loan, that is we can identify from the sanction letter, and repayment of other borrowed funds. So this sum up to total cash outflow for the project. And here we need to enter the promoter's capital, project loan disbursement, if any loan has been taken, and any other borrowed fund if available, or if the promoter has been taken. And here we need to mention the receipt from the allottees. This receipt from the allottee should be tallied with the annexure of the form 3, that is total amount of the total receipt to be taken, means to be receivable as well as received from the allottee. So this includes the net cash inflow, and we can, in here promoter's capital, we can also mention the outflow of the cash outflow also by making this in a negative figures. So this is the format of the means of finance which we required to give at the time of registration of project. This means of finance has been incorporated by RERA authority to maintain the financial discipline and in being able to know that whether this project will be properly completed or not. Then the other part of the financial management is the banking discipline. The RERA authority has established by way of, in the act, by section 4 to LD, it is specifically mentioned that amount from separate bank account can be withdrawn only after certification by architect, engineer, and chartered accountant in practice. And the same has been mentioned by Rule 5, that withdrawal from separate bank account can be done after it is certified by chartered accountant in the respect of cost already incurred for the purpose of calculating the proportionate cost of completion of project. Means the withdrawal of the amount should be in proportion to the cost of completion of the project. And RERA authority has come up with the Gujarat RERA Bank Account Direction 2018, which is issued on 19th Feb 2018, which has clarified all the confusion which was earlier before this circular, that how this RERA bank account is needed to be operated, and how what name is required, or what kind of separate account we need to maintain. I have just make a bullet point from the Gujarat RERA Bank Account Direction 2018. It has mentioned the definition of RERA account. The RERA account means the separate account to be maintained by the promoter in a scheduled bank as per section 4 to LD of the Act to cover the cost of construction and the land cost of the project. So it is specifically mentioned that it is a separate account and it is to be opened in a scheduled bank. It means when means for any project we need to open at least 2 bank accounts. One is RERA account and another we can open as a current account. Some of the bank open 3 account, that is a collection account, then RERA designated, and then utilization. But maximum we can have 2 accounts, that is a RERA separate account, in which we need to deposit the 70% of the amount collected from the allottees, and other is a basic current account which can be utilized for deposit of all other cash inflow, means all other cash inflow, that is promoter contribution and other, and 30% of the collection amount plus any other GST expenses or other pass-through charges can be deposited in that account, and expense can also be done from that account. Now there is general guidelines given for this. That the RERA bank account which is open, should be a non-lien account, and the withdrawal from that account should be in accordance with the provision of the RERA laws, that is Rule 3 and Rule 4 to LD of the RERA Act. Then the authority has recommended that funds from this account should be utilized for the same real estate project and should not be used for other project. However, there is no specific mention that it should be used in the same real estate project only. So there is no end use restriction on that. The withdrawal will be dependent on the percentage of completion. Now, account opening. The RERA account should be a designated account or a separate account. It should not be a simple current account. And RERA initially RERA account is to be open after the project we get a registration, but now the RERA account is to be open before application for registration. Now the RERA account should be with the suffix the term RERA account for name of the project, real estate project with the name of RERA account holder. For example, the firm is ABC Infra, so the account starts with ABC Infra RERA account for project that is XYZ Heights. So the RERA account should be in this manner only. And if the firm is having 3 or 4 projects in their in one firm, then the firm or a company needs to maintain a separate account for each and every projects. Now, what are the deposits in the account? So in RERA account, 70% of the amount collected from the allottees should be deposited in a RERA account. However, where estimated cost of project exceeds estimated value of sales revenue, which we have already seen in Form 3, then the 100% of the amount collected from the allottees is required to deposit in that account. If then FD can be created from RERA account. If the excess fund is there, then promoter can create an FD from RERA account, but that FD should be a no lien FD. Now, what are the withdrawals? What amount which can withdraw from that account? So, as per second provision of the section 4 to LD of the Act, amount shall be withdrawn after it is certified by architect, engineer, and chartered accountant in practice that the withdrawal is in proportion to the percentage of completion of the project. Even the Rule 5 of the regulation also mentioned that for purpose of withdrawal of fund from the account, all the forms, that is Form 1, 2, 3, that is architect, engineer, CN certificate, should be in record, and based on that the amount can be withdrawn, and the withdrawal amount can be verified from the it is shown under the serial number 8 of Form 3 that what actual amount which can be withdrawn from a RERA account. Further, on completion of the project, the entire balance amount lying in the RERA account can be withdrawn by the promoter on the basis of submission of necessary certificates and new project completion compliance, including submission of quarter end data. Now, by this direction, authority power has been given to the RERA authority. The RERA authority may direct the bank for freeze or defreeze of the account in accordance with the section 7(4)(c) and section 8 of the account. The authority may, in the interest of allottees, inquire into the payment of amount out of RERA account as per Rule 8(3)(a) of the RERA rules. Means wherever RERA authority finds that the fund is misutilized or is getting diverted, the RERA authority may ask data from the banks and check whether the RERA account, whether the fund has been utilized or what payment has been made from this account. Now, we need to maintain a separate RERA account. However, when we want to change our RERA bank account from one bank to another bank, then there is a procedure specified in this regulation that we need to take prior written permission from the authority. The prior written permission from the authority will be done by way of by filing RA1, that is an application for change in RERA account, and RA2, that is certificate of balance from bank with our existing RERA account. So these two forms are required to be uploaded on the website, and then we need to ask a permission from the authority. And till that time, we need to freeze. The promoter need to freeze all the transaction as the closing balance of our previous RERA account will be reflected as an opening balance. We need to transfer that balance by way of RA3 and RA4 to the new account. So after getting that approval, we need to file RA3, that is a confirmation letter of change in RERA account. We need to I'll go through the templates of all this RA1, RA2, RA3, and RA4 after this. So RA3 is a confirmation letter of change in RERA account, and then RA4 is to be issued by the bank where we have opened our new RERA account. That is a certificate of fund transfer from bank having a new RERA account. I'll show the formats of RERA 1, 2, 3 and RA1, RA2, RA3 and RA4. So this is the templates for RA1, that is application for change in RERA account. We need to write to the RERA authority about this application. Here we need to mention the details of current RERA account, that is bank name, branch name, account number, IFSC code, and proposed RERA account which we want to open. Then this is RA2. RA2 is a balance. This is a certificate. We need to the closing balance of our existing RERA bank account. We need to mention over here the bank name, branch name, account holder, and closing balance of RERA account. After getting the approval, we need to file this RA3 form, that is a confirmation letter of change in RERA account, along with the RA4 form. In RA3 form, we need to mention the previous RERA account bank detail and new RERA bank account detail. And RA4 is a certificate we need to give from the bank, from in the new bank where we have opened a new RERA bank account, specifying that the amount has been transferred from the old RERA account to new RERA account. Here also we need to mention all the bank details and amount and closing balance we have received on the date of transfer. I think, sir, this is what the basic short topic of the financial discipline under RERA, which I have covered. If anyone has any question or anything in this.
Vishwaji, is there any questions on this?
Sir, if it is not there, then we can proceed with the Form 5.
Yeah, I think you can.
You were saying that Aniket sir is there, so he's there, or I need to take that?
He is not joined as of now.
Okay.
Cannot see him.
So okay. So I'll go with the Form 5. So Form 5 is an annual statement which is required, which is to be certified by a chartered accountant after the accounts is getting audited for a specific financial year. So the requirement of Form 5 has been arise from the third provision to Section 4 LD of the RERA Act. Here it is mentioned that promoter needs to get his accounts audited within 6 months after end of every financial year by CA in practice, and shall produce a statement of accounts duly certified and signed by a chartered accountant, and it should be verified that the amount collected for a particular project have been utilized in the project and withdrawal has been in proportion to the percentage of completion of the project.
Santosh. Sorry.
Here regulation 4 is also specified. Regulation 4 or Gujarat RERA Regulatory Authority Regulation 2017 has also specified the details. We will go through it on a later stage. Then Circular 1 has the notified Form 1, 2, 3, 4 and 5. But the Form 5 has been later on amended by Gujarat Real Estate Regulatory Authority second general amendment dated 9/7/2018. Now, the third provision of the RERA Act specifies that the provision of the RERA Act requires the promoter shall get his accounts audited within 6 months after the end of every year by a chartered accountant practice, and shall produce a form duly certified and signed by such chartered accountant, and it should verify during the audit that the amount collected for a particular project have been utilized for the same project. Then the withdrawal has been in compliance with the proportion to the percentage completion of the project. Now, Regulation 4 of Gujarat RERA Real Estate Regulatory Authority, General Regulation 2017, has specified that in addition to Section 11(1) of the RERA Act and Rule 3 and 4 of the RERA rules, the promoter shall require to upload the annual report on statement of accounts in Form 5, issued in accordance with the third provision of Section 4(2), duly certified and signed by the chartered accountant in practice, who is a statutory auditor of the promoter's enterprise. They have specified, they have given two explanations to this regulation. Explanation 1 specified that the chartered accountant certifying this progress of the real estate project, that is Form 3, I would say, for the purpose of withdrawal of amount for the separate account, should be different entity than the chartered account who is statutory auditor of the promoter enterprise. It means the CA issuing Form 3 means in any of the quarter, the CA which has issued Form 3 in any of the quarter of the financial year should be different than this should not sign Form 5. The person that is signing the Form 5 is different from the CA issuing Form 3. Then explanation 2 has been given that if the Form 5 issued by statutory auditor reveals that any certificate issued by the project architect, engineer or chartered accountant has false or incorrect information, and the amounts collected for a particular project have not been utilized for the project, and the withdrawal has not been in compliance with the proportion to the percentage of completion of the project, the authority, in addition to taking penal action as contemplated in the Act and rule, shall also take up the matter with the concerned regulatory body of the said professional of the architect, engineer or chartered accountant for necessary penal action against them, including cancellation of registration of membership for practice as such. In short, they want to say that they can take a penal action, the penal action mentioned under the Act, as well as they can take this matter where any of the form has been false or found to be an incorrect, having an incorrect information. Then they can file a matter to the concerned regulatory authority. Now, the format of Form 5. The Form 5 was initially given by Circular 1, but the same has been amended by Gujarat RERA Regulation 2017, dated 9/7/2018. Here, the new format prescribed by the authority has widened the scope of audit by not only auditing Form 3, but also commenting and reviewing various matters pertaining to the RERA bank account, financial borrowing, and certification issued by various experts or various professionals. That is Form 1 and 2, Form 1, 2, and 3. Now, who are the promoters, or which are the projects which are required to submit Form 5? The specific guidance note has been issued by the authority, where they have mentioned that a project having registration granted on or before the said financial year and having project end date greater than 30th September, that is 6 months from the immediately succeeding financial year, and a project has not submitted online quarter end compliance, or having extension application applied granted for the period beyond 30th September of the immediately succeeding financial year. In short, the project who are not ending before 30th September, or the project which are ending and have applied for extension which is beyond 30th September, are required to submit Form 5 Okay. The project promoter has to get his account executed for every financial year and get Form 5 submitted to Gujarat RERA authority for each financial year till the project ends. Now I have specified some checklist for issuing Form 5. That is what all documents you will require for preparation of Form 5. That is, you will require a copy of application form and documents which are submitted at the time of application for registration of real estate. This is required to verify the project cost and everything given at the time of project application form, and Form B affidavit which mention the project end date and start date. Then you will require a RERA registration certificate issued by the authority which specify the project end date and start date, and all the signed Form 1, Form 2 and Form 3 uploaded or issued during the financial year under audit. Then bank account statement of the separate bank account, that is a separate bank account, that is a RERA account for the relevant financial year. Then details of fixed deposit, if any, created by the in the project, and status of its lien mark. We need to take a certificate from the bank whether the fixed deposit has been marked lien or it is not marked as it is not a lien account. Then copy of all agreements to sales, that is a sales agreement and agreement to sales done during the financial year. Then details of books of accounts of the project, such as member booking ledger or any other accounting details as required, that is the project cost detail and everything. Then project loan documents, that is sanction letter, if any finance has been taken, then sanction letter, mortgage deed, outstanding certificate from the lender as on 31st March, and loan account statement. Or if any loan has not been taken, then we need to take a certificate from the promoter that we have not taken any finance from any banks or NBFC, or any unsecured loan has not been taken. And additionally, we need to take the audited financial statements of specific period, that is specific financial year, which are under audit, for which we need to issue Form 5. Now, what all we need to verify for doing this RERA audit? We need to verify the banking under RERA, that is specified by banking RERA bank account direction, that is how the withdrawal has been done, how deposit has been done. Then verification of the deposit of money collected from the allottees, verification of money collected prior to the registration, if any taken from this, which is a violation of the act. Then verification of withdrawal of fund, that is in line with the Form 3. Verification of receipt of money from the allottee, if any excess, that is in excess of 10% of the unit without entering into registration agreement to sale, which is a violation, we need to report. Then we need to provide details of project loans, borrowings, and details of encumbrances, if any is there. And we need to comments on the discrepancy. If found with Form 1, 2, and Form 3 issued during the financial year. So now I'll go through the Form 5. I have divided the Form 3 in the various parts. Okay, so this is basically a format. This is the introduction section, the introduction part, that we need to mention promoters name, project name, PAN, address, and the financial year for which we need to audit. Now we'll take directly the first point, that is the Form 5 has been divided in specifically a questionnaire method, that is a yes or no, and if there is any violation, then we need to report them in a subpart of any of the heading. Now, first is whether separate RERA bank account has been opened as investigate in Gujarat RERA bank account direction 2000. So we need to verify that separate bank account as required by RERA has been opened by the firm or not. That we can verify from the bank details provided to us. If they open a separate bank account, then we need to click on yes. If the separate bank account has not been mentioned, then we have to say no, and then we need to mention whether the existing operational bank account has made known at the time of application of registration as RERA bank account. So we need to verify that the existing bank account has been already intimated to the RERA bank, means RERA authority while registration, or it has been changed. If it has been changed, then we need to verify that any alteration application for change in RERA bank account has been done or not. Then in second, we need to mention details of RERA bank account as registered with Gujarat RERA. And here we need to mention all the bank accounts. If there has been any change in bank account, then there is an option to add additional account information. So if during the year, in initial period, one bank account is there and we have opened the second bank account, then we can also mention. Then we can also mention the other RERA bank account opened by us. Here all the details related to bank is to be mentioned, that is bank name, branch name, account number, type of account, IFSC, details of account opening, date of account opening, from which date we have opened the account, opening balance, that is if it is since previous financial year, then here we can mention 1st April. If the change in bank account has been there, then we need to mention the date of opening of that account, then total deposit during the period and total withdrawal during the period. So based on that, the closing balance would be there. Then in third part, in case of change in RERA bank account, if the bank account has been changed, then whether due approval following prescribed documentation was taken from Gujarat RERA under the Gujarat RERA Bank Account Direction 2018. As we already gone through the Gujarat RERA Bank Account Direction 2018, we need to check whether if the RERA account has been, new RERA account has been open or the RERA account has been changed, whether the procedure which has been mentioned in Gujarat RERA Bank Account Direction has been followed, that is RA 1, 2, 3, 4 has been filed or not. Then whether any of the Form 3 issued during the certificate period mandated deposit of 100% of the money collected from the booking of the project units. That is in Form 3 it is mentioned if the amount of receipt means the receipt which is receivable and the project cost, if project cost is higher than the receivable, then here we need to deposit 100% of the amount. So we need to verify from the Form 3 that whether any of the Form 3 mentioned that 100% of the money collected is to be deposited. If it is there, then we need to mention the details of certificate, that is certifying professional, and date of certificate. If it is not there, then we just need to mention no for that. Then fifth, whether the required proportion of money collected from the allottees of the project units as indicated in the Form 3 deposited in RERA bank account, means whatever amount which we have collected from the allottees, 70% of that amount has been deposited in the RERA bank account or it has not been deposited. If it has not been deposited in the RERA bank account, then we need to mention the period for the same, when it is not deposited, and amount of money which is not deposited. Sixth is whether the project registration is as new or an ongoing project. So we need to mention that we can see from project application form or from a certificate, it has been mentioned whether it is a new project or ongoing project. Now, in case of new project registration, whether there is any booking taken prior to project registration. So they want to ask that whether any booking has been taken before taking a registration. If it is there, then we need to mention details for the same. If yes, then please provide data as below, that is number of such units booked. So we need to mention just number of units and total amount. We don't need to mention each and every unit number. We need to mention the total number of units booked, amount and total amount collected from such booking, and total consideration of such booking, means total amount of sales value of such bookings. Then 7, whether all amounts withdrawn from RERA bank account were within the withdrawal limit as certified under relevant Form 3 issued during the reporting period. This we can identify from the serial number 8 of Form 3, that the amount withdrawal is within limit as mentioned under Form 3. If it is okay, then it's fine. If it is not there, then again we need to mention for which period this excess withdrawal has been done, and the amount which has been excess withdrawal is to be mentioned. If we need when while filing while providing data in this 7.1, the detail is coming where we have to mention total cumulative withdrawal limit as on 31st March in serial number 6 of Form 3, and we need to mention cumulative withdrawal from separate account, that is RERA account, we have made till 31st March. Then in 8 point, it has been mentioned whether any fixed deposit was created out of funds deposited in RERA bank account. If any fixed deposit has been created, then we need to mention details of the same. And here we need to mention if the fixed deposit is created with the same RERA bank account, same RERA account bank branch, is in compliance with para 5.2 of Gujarat RERA Bank Direction 2008. Here para 5.2 mentioned that the fixed deposit which is open in the fixed deposit which is open in the bank should be a non-lien account. Then if yes to 8 above, means if lien has been created, then whether any lien is created on such fixed deposit is in violation of para 5.2 of Gujarat RERA Bank Account Direction 2008, we have to mention that over here. Then 9 point, whether there has been any instance of receipt of consideration in excess of 10% of apartment value without entering into registered agreement for sale. We need to verify the ledgers of the all the allottees, and we can verify from the Form 3 whether any instances is there which is in which the agreement for sale has not been done, and the promoter has taken 10% of the promoter has taken a fund in excess of 10%. Then we need to report that this over here, which can be verified from the sale deed and agreement to sale from here. If violation has been done, then we need to specify the unit number, total consideration received, and amount received in excess of 10% till registered agreement to sale has been executed. Now, in 10th point, we have to verify whether the project is executed by availing any loans or borrowings. Whether any loan or borrowing has been taken by the promoter or taken for the project, then this we can verify from the Form 3, where it is required to mention if any loan has been taken and details of loan amount taken, withdrawal, deposit, and repayment during the repayment done during the period. So we can verify this from Form 3, as well as we can take sanction letter and mortgage deed, and we need to mention here the details of loan, that is type of lender, loan amount sanction, sanction date, and loan outstanding as on the 31st March, and details of collateral and mortgage details given for this loan. Then if loan is taken, then whether the financial encumbrance is reported to Gujarat RERA authority, means if any financial income, means if loan has been taken, then while taking registration, we need to mention the encumbrances in Form B, that is the affidavit of promoter. So whether this financial encumbrance has been reported, we need to verify from that. If it is reported, then whether promoter has mortgaged or created a charge on any booking unit. If it has been created, then we need to mention, and in that we need to mention the total estimated cost of project, as per Form 3, and total loan taken for the project, from where we can identify the percentage of loan taken with respect to the project cost. Now, in 11th point, we have to verify whether any discrepancy noticed in Form 1, 2, and 3 with reference to their issuance in accordance with the RERA Act rules and regulation. So we need to verify all the Form 1, 2, and 3, and as we have seen in while in the session of Form 3, that there was a difference which we can identify in Form 1, 2, and 3. So that things we need to mention. If there is any deviation or are not according, or the coherence with of form 1, 2 and 3 is not there, then we need to mention over here, or if there is any discrepancy mentioned in form 1, 2 and 3, then also we need to provide details here, and in here we need to provide which form 1, 2 or 3 is there, and certifying professional, date of issue and details of discrepancy we need to mention here. And then this, if any of the discrepancy or any other things we need to report, so the point is given, the 12th point, please specify any other things which are not covered above. If any of the discrepancy we find which is not in accordance with the RERA Act or RERA rules, we need to specify it over here. Then here we need to, it is just a format in which we need to mention that we have verified the financial statement of the year ending and the other details. Along with the form 5, we need to attach the data, the documents, that is a audited balance sheet, P&L, cash flow statement. If the form is not audited, then a basic balance sheet for profit and loss account, and cash flow statement if applicable. If it is not applicable, then we don't need to upload the cash flow statement. So that's it for the session. If anyone has any query, then please.
Mishra ji, any questions on form 5?
Hello.
Yes.
Hello.
Yes. हाँ बोलिए.
Question तो नहीं आया सर.
Just a question, how do you manage the form 5's due date comes as around 30th September and date of audit of finalization of accounts is say 31st October this year. So
So mainly RERA authority extend the date based on the audit, means what is the last date of audit, and based on that in previous or financial year they have extended the date based on the last date of audit report. And if it is not that, it is not audited, then we can upload the unaudited financial statement also. It is not mentioned that audited financial statement is required to be uploaded. We can even file the unaudited financial statements.
okay. Mishra ji, any questions? So I think there are no questions, and you are very sorry, there are questions. Sorry.
Sir, submit sir. Share किया sir.
If promoter constructs 70% project without obtaining booking money from customer and thereafter apply for RERA registration, in that case, no sir. In that case, point number 7, that is amount withdrawal till date of certificates for books of accounts and bank. So here, even if we are, if booking is taken before completion of the certificate, then we need to take a RERA registration, and by virtue of this, I think if 75% of the project has been completed, then the withdrawal limit will already be then. This is a part I will answering the question 1, that is the form 3 part. I think Sarthak Bhai is also there. Sarthak Bhai, if you also want to.
So should I take the question 2?
Okay.
So in a RERA registered project, there are 110 bungalows as per plan to be developed by promoter. However, after obtaining RERA registration, promoter decided to develop only 7 bungalows and want to sell balance areas plot only. Sir, if 3 units are not to be developed, then he'll get the plans changed from the local authority, the planning authority, and then there's a provision of RERA alteration that he needs to file with the authority, and then he can in the revised form he'll show as form 3A. In the sorry, so if your question is can he do so, yes, he can do so. The plan will be changed by the planning authority, and then RERA will also issue a revised certificate. If yes, how? it will be shown in Form 3A. So till the alteration is done, all 10 bungalows need to be shown. The 3 will be shown as unbooked, and after alteration, those 10 will get reduced to 7. So your issues, your question, I think, is resolved with that.
Sarkar bhai, I have a query for this specifically.
Yeah.
If I am constructing only 7 bungalows and I am not constructing another 3 bungalows, so it is compulsory to get it the plan altered from the concerned authority, or I can just give an affidavit or that I don't want to construct this 3 bungalows.
No, so what happens is at the time of BU, when you're going to take the BU, you have an option to revise the plan then also. So you might not, just to avoid the procedural hassles, you might not go with the alteration initially right now, and at the time of BU you get those plans revised, because as soon as you keep it as a vacant plot, if it is part of the same project, it becomes part of the common areas that you have to provide to the other allottees.
Okay, because
If
I
you
have
want
one
to,
specific.
yeah.
I have a specific query on this. Means not this 10 bungalows. Suppose I'm constructing 4 floors. I have registered a project for construction of 4 floors. Okay. Now, if I am constructing only for first and second one, because I am not getting a proper booking due to this COVID situation, and I am canceling the my project, that is third and fourth floor, I will not gonna construct just now. So for that I need to get an alteration from the authority, because the GDCR has been changed. When I have taken the permission, uh, the uh, the fourth floor was approved to me, but now the GDCR has been changed, and if I am applying now, then I need to leave means a lot of land, as an open land, and the planning which is already been taken will not means the same would not be there in a new plan. So I
Right,
think
so
for that,
yeah,
we can take a partial completion.
yeah. So basically, in any so one we are talking about change in plan. There are two aspects to this. First is the change in the planning itself. So when you're changing any planning, you need to take consent from the allottees. So two-third allottees consent will be required. So that is part of the RERA Act, what I'm talking about. The second aspect is the procedural part. So for the procedure, if you have already taken consent of two-third allottees, you might as well get the plans revised and get it altered with RERA authority as well. So that is what I would recommend. But if you are adverse to going through the entire procedure, because you are anyways reducing and not increasing, then you might also at the end of the project, while taking the BU, you may pay the necessary fees for the alteration and get it altered with RERA authority as well at the time of completion, and then file your quarter end.
Okay.
Anyways, if you're changing your original planning, plans have to be revised and has to be updated with the RERA authority.
Okay.
So it's only a matter of time when you're wanting to do it, right now, at the present, or at the time of BU.
Okay. It would be at the time of view only.
I think there's one more question, question 3, amount
Yes.
withdrawn till date. If promoter constructs 70% project without obtaining booking money from customer and thereafter applying for RERA registration, in that case, point number 7, amount withdrawn till date of the certificate, or whether amount will be 0. Yes, sir. So, sir, to answer the question, construction is immaterial in this case. The amount withdrawn till the date of this certificate as per books of accounts and bank comes from whatever amount you have received from the allottees. So if you are saying that without obtaining booking money, you have received 0 amount, so obviously you'll deposit 0 amount in your RERA bank account, that is separate bank account, and hence withdrawal becomes 0. I hope this is clear. Here the answer is yes, it will be 0.
So that answers the third question also. Any other further questions, Mishra ji, or we can move ahead?
The same question.
This is the same question.
This is the same question has been repeated, so I think that would be it. So it was a very good deliberation by both Sarthak Bansali and Niraj Shah, and also appreciate efforts put in by special efforts put in by Niraj Shah to fill in for Aniket Talati sir, who is busy in some other seminar. He might join. He is also shown his commitment that he might join if he is free from there. But thank you for filling in for him. So now I request CA Nilesh Vasa to give a formal vote of thanks to both the speakers, CA Sarthak Pansali and Niraj Shah.
Thank you, Aditya ji, for giving me this opportunity to give a vote of thanks to both young and energetic chartered accountants, CA Niraj Shah and CA Sarthak Bansali. Sir, you have explained very well in depth and with minute details regarding Form 3, Form 4 today on our topic at GUJRERA practice and professional opportunities. So you explained regarding provisions of RERA, maintenance of records, and fund withdrawal planning. So the issue of certificate for a chartered accountant was very important topic today, and you have explained it very well and very minutely. I would like to propose a very well deserved vote of thanks to both the young and energetic speakers on behalf of Western India Regional Council of Institute of Chartered Accountants of India with a loud round of applause.
Thank you.
Thank you, Niraj sir. Thank you, Sarthak sir. Thank you.
Thank you.
Sir.
Thank you. Thank you, Niraj.
Yeah.
So now we move to our next topic, which will be taken by CA Imran Somera, which is function, roles, and powers of RERA. So I will request CA Nilesh Vasa again to kindly introduce the speaker.
Thank you once again, Aditya ji. CA Imran Somera, a commerce postgraduate from MSU Baroda. He has cleared certificate course on concurrent audit of banks conducted by the Institute of Chartered Accountants of India. He is a partner of the firm Ames and Associates, situated at Baroda, Godhra, and Chota Udaipur. He was qualified as chartered accountant in 2012, and he is looking into the matters like direct tax, indirect taxes, RERA, audit, and assurance services. He has delivered various lectures on subject of GST and RERA at various public forums, banks, members, study circle, students, national and regional conferences held on different locations that are organized by Institute of Chartered Accountants of India. With this brief introduction, I welcome another young and energetic CA Imran Somera ji today at our session. Welcome, sir, from behalf of Western India Regional Council.
Thank you so much, sir. I'm audible?
Yes, sir.
Yes,
All
sir.
yours now.
Okay. Thank you. My screen is visible to you?
Our desktop is visible. Yes, sir. Your PPT is visible.
Sir, I am not able to see but my PPT.
But title page is there on the screen as well.
Okay, now I can see my screen. It is visible to you also?
Yes, sir. Yes, sir.
Okay, chill. Let's begin then. My today's topic is the role, function, and powers of RERA. We all know that after coming RERA, the entire working of the real estate sector has been changed with very much transparency, because as we all know, the real estate industry is contributing a very huge amount in the GDP of the India. And apart from that fact, the industry was not backed by some regulation or the controller. And after introduction of the after implementation of the RERA, now this industry is under regulation in the of the government, and it can be controlled easily. It can this industry now is working in a very transparent manner, which can protect the interest of the consumer. My first slide is I have mentioned the object or the preamble of the RERA, in which the prima facie preamble itself give the indication how this RERA authority or the act will benefit to the ultimate citizens of the India. I just read this preamble first. An act to establish the real estate regulatory authority for regulation and promotion of the real estate sector, and ensure sale of plot, apartment or building in an efficient and transparent manner, to protect the interest of the consumer in the real estate sector, and establish an adjudicating mechanism for speedy dispute redressal, and also establish an appellate tribunal to hear an appeal from the decisions, directions and order of the authority. So from the preamble or from the object of the RERA, we can define this role that the RERA authority is exercising. The number one point is regulation. Because this is very huge contributing industry to the GDP, its regulator is topmost important, because this was running with a lot of malfunctions and lot of irregularities. It was not working in a structured way. So regulation was very much needed at that time. The second thing is the transparency, because we have faced many of the cases as a professional that builder executing more than one agreement to sell with the different allottees for the same unit. So the missing was the transparency was missing between buyer and seller. Now after coming RERA authority is governing these issues, and after that this transparency is increased, and it will protecting the interest of the consumers. So these are the main roles of the authority. We have specific dispute redressal system also, so that the direct any dispute of the allottee or the builder, they can directly go to the RERA authority, because we all know that Indian jurisdiction has also too many cases in the queue. So after coming of the specific redressal system in the RERA, the allottee's interest is secure on more basis, and their problems are solved in a speedy manner. The functions of the authority are mentioned in section 34 of the Act. First of all, the authority is mandating to register the projects which are required to be registered as per the law, as per the Act. There are two main conditions for that. Number one, if the promoter is proposed to develop more than 500 square meter of the land area, or he is developing, number two, he is developing more than 8 apartments. So it is mandatory to register the project to the RERA authority if the land is situated in the planning area. So the functions of the authority is to register, first of all, register the register the project which are necessary as per the act. After registration, they regulate the projects and they regulate the registered real estate agent for that. The second functions of the authority is they are collecting and maintaining the records of all the registered projects and agents, and they are hosting it on the website so that all the stakeholders can take the benefit before buying any property, and they can take or they can view all the legal and important documents of the developer before visiting the site itself. What are the things that to be collected and hosted on the website are mentioned in rule number 10 of the rules. Number one, the information that are collecting are details of the promoter. First of all, they are collecting information in a way that what is the legal status of the promoter, whether it is proprietary firm or it is a partnership firm or private limited structure or LLP, then accordingly taking the legal documents for that. What are the qualifications of the promoter, whether they have any experience in this, whether they have any qualifications or expertise in this construction work or development work can be easily accessible by the allottees on the website. Then the contact details of the promoters. Secondly, the track record of the promoter. The track record is the number of projects completed by the same promoter before within a span of 5 years. What are the ongoing projects? How many projects are already been completed, or how many projects are in simultaneously he is developing? That details was readily available. That details are collecting the authority as per section 34 and subsection rule 10, and then it is displayed on the website. What are the litigations that already promoter is already involved in some of the litigations, then they can also be easily been accessible to the allottees. Then the websites of the promoter where minute detail or the further detail can be obtained by the allottees are captured by this section. Next, the project details. Project details including commencement certificate, sanction plans, layout plans, and the specifications of the project. The apartment and garage related details, that is the number of units, types of units, then the carpet area of the units, the garage details, the open and covered parking details, then the registered agents who is registered with the specific project. Their name and their addresses were also mentioned. The consultant, that is the contractors, architects and engineers associated with that project. Then the location of the project site, the clear demarcation with the latitude and longitude details. In the development plan, that is the fire fitting facilities, drinking water facilities, emergency evacuation services, that all the project related information that are captured as per rule 10, and it has been hosted to the website as per the section. Then the financials of the promoter has been taken, so that the in case of slack periods, how the promoter will take the project to the next level, or how he will develop further, so that his financials was also taken. His active PAN number, PAN card details have been taken. The audited financial statements of the preceding 3 financial years, including cash flow statements, director's report if applicable. If it is a fresh form, it is a fresh promoter's legal entity, then that was not supposed to be, not required to be submitted, because if they are registering the new entity and immediately registering for the project, then their past history will not be required to be submitted. Then the quarterly updates on the website. We all know the promoters needs to update all the site related information, their booking status, their completion percentages, their information related to the parking sold area, or to the if it is allotted, then all their constructions site photographs with identification of the tower. That is, if it is developing 4 towers, then tower A separate picture, separate photograph, then tower B has a separate photograph, so that they can identify the actual percentage of construction and with the form submitted on quarterly basis. Then they are providing, authority is providing all the legal documents and approvals taken by the promoter on download for the purpose of download to the allottees on a website. All the related documents were collected by the authority at the time of taking, or the time of granting the registration of the project. To continue on that, authority has to maintain the database of the promoter who are defaulters, so that the defaulters promoters can easily be identified by the allottees, and they can, you know, take the decision for their buying properties. For that purpose, authority is maintaining the promoters who are defaulters, or or the projects for which registration has been revoked or penalized under the act, with the reasons thereof. Secondly, authority is maintaining database of the agents also who has applied and registered under the act, but whose registration has been rejected or revoked. After that, to fix the authority has fixed the regulation for each area under its jurisdiction, the fees levied on the allottee and promoters or the real estate agent, to ensure that the compliances of the obligations cast upon the promoter, allottee and the agent under these act rules regulation made under. Authority is ensuring that all the responsibilities or all the duties which are casted to the promoter to timely deliver the project, to maintain the quality, you know, to comply with the legal aspects of the RERA, to comply with the specifications of the project, to comply with the approved plans, to comply with the various conditions of the agreement to sale. So all these obligations which are already casted to the promoter as per the act, or which are allotted to the allottees as well, a timely payment to the promoters as per their agreement between them. So all their compliances, their obligations are also monitoring by the authority, and if they have any if they are making any violations, then the authority is taking care of that and giving the relaxation to the to one or other party. Then authority is also ensuring the compliances of the regulations and directions made in exercise of this power under this act. Authority also performs such other function as entrusted to the authority by the government under the provision of this act. Now the powers of the authority. Number one, first of all, the authority has all the powers and are vested in the civil code under the Code of Civil Procedure 1908 during the examination of a suit. On the other hand, authority has a power to call for the information, books of accounts, records, documents, and conduct investigation into the affairs of any of the promoter, agent, or allottee on filing of any complaint or on a suo motu basis. If they have any, if they identify any malfunction, they can definitely initiate the process on suo motu basis as well. These are the powers of the authority. Then they can requisite the public record or a document from any other offices as well. They can directly collect the information of the promoter or the allottee. They may call upon any such other experts or consultants from the related fields like commerce, like any expert from the commerce field or the economic field or the architectural or engineering field. If they need any assistance, they can call any other experts or consultant for the same. The authority may also inquire into the payment amount imposed as penalty, interest, or compensation paid or payable by the promoter. They can issue the interim order during any inquiry to restrain the promoter, agent, or allottee from carrying out any act which is in contravention to the provision of the act as per section 36. They can issue directions from time to time to any promoter or agent or allottee for the purpose of discharging its function under the provision of this act. The other power of the authority, he may direct the bank or freeze or defreeze the account in accordance with section 7 and section 8. It has been also pointed out by Niraj Bhai also. The next point was the authority may, in the interest of the allottee, inquire into the payment of amount out of RERA account as per rule 8, so that they can monitor that any fund are not diverting by the promoter from this RERA account. Authority can impose the penalty and interest on any promoter or agent or allottee for doing any act in contravention of the act. They can refer to any matter to the Competition Commission of India, which has the effect of market power monopoly situation being abused against the interest of the allottee as per section 38. They can rectify or amend any of its order within 2 years for any mistake apparent from the record, to recover from any promoter or agent or allottee the amount of interest or penalty or compensation as land revenue who fails to pay these amounts. So if they have the power to compensate the land, to compensate the amount, if the promoter or agent has done any failed, if they are failed to pay these amounts. Thank you. I have covered the functions, role, and power of the authority. Any questions?
Mishra ji, are there any questions?
सर क्वेश्चन है सर
क्या बोला? नहीं है?
सर अभी क्वेश्चन नहीं है सर
है, हाँ, डालें।
सर चैट बॉक्स में है क्वेश्चन?
मैं आदित्य सर अभी क्वेश्चन नहीं है ना सर अभी क्वेश्चन नहीं है सर
Okay,
नहीं
no
है ना?
question.
Okay. I heard we had questions. Sorry. So good evening, everyone. Once again to all. Thanks, Imran, for sharing your knowledge on the topic allotted to you. It's a pleasure to present you a well-deserved hearty vote of thanks on behalf of WRC of ICAI. Thank you for taking time out of your busy schedule and educating our fellow members on the topic allotted to you on the functions and roles and powers of RERA. You went through the preamble of RERA, functions and roles and powers under RERA in a very simple and lucid language, and all the participants took benefit of it. So on behalf of WRC of ICAI, I propose a very hearty vote of thanks and request to everyone to follow it with a loud applause. I also thank the organizers for the structuring the seminar from the best interest of all the members to gain knowledge and do their work assist them in doing their work very properly. And also, last but not the least, I thank all the participants for joining today and learning from the esteemed panelists, faculty.
Thank you, WRC team. Thank you so much.
Yeah. So now we'll end the session. Tomorrow's session. Tomorrow we are also having a session which would be filing of complaints under RERA, appeals, and effect of solutions during and effects during IBC proceedings, and alternative investment and SWAMI funds, which would be taken by the expert faculty teams. And the timing would be 5 to 8 only. So see you all tomorrow. Thank you on behalf of WRC. Bye-bye.
Thank you.
Thanks, Imran sir.
Thank you.
We end the session.